Hello guys, and welcome back to Trade to Learn. Today's video is going to give you the basics of dividends to help you enhance your portfolio, which we'll talk about in later videos. Now let's get back to the study. A dividend is a payment that shareholders receive from a company's earnings. They're paid on a regular basis, and it's a very popular type of stock. But what you may not know is that they're not as good as they seem. And if you want to know why, stick around till the end of the video. First, we're going to talk about the most common ways that dividends are paid out. The first one and most common, cash dividends. Companies generally pay these in cash directly into the shareholder's account. The second type of dividends are stock dividends. This is when companies pay dividends by giving the shareholder additional shares of the company. The third type of dividends are dividend reinvestment plans. Investors who are in this program are able to reinvest any dividends received back into the company's stock, often at a discount. The fourth and last type of dividends are special dividends. These dividends pay out on all their shares of a company's common stock but don't reoccur like normal dividends. A company often issues a special dividend to distribute profits that have accumulated over several years and for which have no immediate need. Now, we're going to talk about how often dividends are paid out in the United States. Companies usually pay dividends quarterly, and some even pay monthly or semi-annually. Quarterly is every quarter, which means 4 times in a year. Monthly is every month, so 12 times in a year. And semi-annually is twice in a year. Once the company's board of directors has approved or disapproved each and every dividend, the company will then announce 3 things: when the dividend will be paid out, the amount of the dividend, and the ex-dividend date. The ex-dividend date is extremely important to investors because investors must own that stock by the date to receive the dividend. Investors who purchase the stock after the ex-dividend date will not be eligible to receive the dividend. Investors who sell the stock after the ex-dividend date are still entitled to receive the dividend because they own the shares as of the ex-dividend date. Finally, we're going to talk about why dividends may not be as good as they seem. Dividends do provide a steady profit and not a lot of risk, but only sometimes. Because if you're looking for big profits, fast profits with not a lot of investment, dividends are not the way to go. This is because you have to put thousands and thousands of dollars if you want even a little bit of profit. Another problem is that share prices can drop whether or not the company pays their dividend. Also, companies don't technically owe you any dividends, so they can slash or eliminate dividend payments at any time and for any reason. That was all for today's video. If you enjoyed, don't hesitate to drop a like, subscribe, and share. See you next time!